Get Rich Slow with John Wolf. Hey, today I want to talk to you about the Oregon VA and the National VA loan. That's right, two different things. Oregon has its own Department of Veterans Affairs, and by the way, as far as I can tell, the Oregon Department of Veterans Affairs is everything that people who have never had to deal with the National Department of Veterans Affairs should be. But that's another story. Let's just talk about the home loans. Okay, so the Oregon VA is actually a conventional that is specially set up for veterans purchasing homes in Oregon. You don't have to be from Oregon, but you do have to be buying a house in Oregon. They have their own definition of what a qualifying veteran is. There's a lot of people who will qualify for this who don't qualify for the national VA loan. So just so that's clear. But anyways, let's talk about the basics. Oregon VA, it has a lower than normal conventional interest rate. It is 5% down minimum, and you will have mortgage insurance if you don't put 20% down, but it has the absolute lowest fees of any loan program I know about. Your actual loan fee itself is $650, stop, end, that's all of it. $650, full stop. Now there are other closing costs, but the loan fee itself, $650, full stop. Now the average VA loan, if you're going from lender to lender, is $1,000 to $3,000 plus, if you're not a disabled veteran, plus 2.3% the first time, 3 1/3 the second time. I think it's 4.3% the third time. Percent charge up front. So if you're buying a $200,000 house, that means there's going to be an upfront fee of $4,600. Yikes. Now, they do let you roll that into the loan, so it truly is a zero down loan, but that is a lot of wealth that you're never going to get back. I mean, except for the fact that you got the home and you're going to build a ton of wealth that way. But you're not going to get those dollars back. They're gone forever, finito. Is it still worth it as a phenomenal zero down program? Absolutely. So don't let that discourage you from a national VA loan. But just again, Oregon VA, $600 flat. National VA, $1,000 to $3,000 plus 2.3% the first time, going up in subsequent uses. So that is a huge difference. Also, there are some other reasons why you would qualify for Oregon VA when you wouldn't qualify for a VA. And that has a lot to do with income history. So an Oregon VA loan, you may qualify for an Oregon VA loan if you have only been working for like 6 months and you don't have a longer income history, and I mean like there was a long gap. For the national VA, you need to at minimum be working for 1 year. And again, school counts as history. Service counts as history, but you can't have, I'm talking about like since an unemployment that was more than a month long, especially if it was more than 3 months long. Really, the VA wants to see 2 years where you worked as a block, or at least go back in time in history long enough that there was a solid 2-year block. Anyways, so that's the short version of the difference between National VA and Oregon VA. Now let's just take a second and talk about interest rates. So right this moment, we have unprecedentedly low interest rates across the board. So this spring is the first time in the general scheme of lifetime I remember where the Oregon VA isn't a lower interest rate than the National VA, but I'm sure that's coming back in the future. Let's also talk a little bit about strategy and who can be on the loan. So for Oregon VA, the only people who can be on the loan are veteran and spouse, or veteran alone. For National VA, it's intended for veteran only or veteran and spouse, but if you put some money down, you can have a non-spouse, non-veteran on a VA loan. You can also have multiple veterans who aren't spouses. And then let's talk about the home type. So Oregon VA, any single family home in Oregon, more or less. For National VA, you can have 1 to a 4-plex, and you do need to live there, and obviously it doesn't just have to be in Oregon. And buying a 4-plex as your first home, as an investment property for the future, as a VA loan is the best deal anybody gets to make in any home lending as far as what the clients win out of that, because you get an zero down or an almost zero down loan. You get no mortgage insurance. You get to move in and you get more or less the lowest interest rates around. So just so you have an idea, right now, as recording here on a couple days before the 4th of July, all of the VA loans I've quoted in the last couple weeks have been between 2.5% interest and 2.75% interest. Now I don't have the APRs in front of me, but this isn't a quote for you anyways, but that's kind of the range we're talking about, and that's just mind-blowing. So that upfront fee isn't a big deal. There is some other stuff that I think that you need to know about the VA loan, which several clients have come to me recently from other lenders and they weren't told this at all. So it's really important. VA loan is zero down if you're the veteran yourself. However, if you're buying a home as a VA loan and you have a non-spouse, non-veteran buying the home with you, they have to actually put down half of 25% down of the loan amount, because it doesn't seem like it, it's not obvious, but what a VA loan really is, the VA is putting 25% down for you as an assurance. So if you want to buy a home with a non-veteran, the non-veteran has to come up with their half of that 25%. So that's 12.5%, right guys? I hope I'm doing that math right. But anyways, it would be 12.5% down. Then there's one other really important thing. There are two flavors of the VA loan for the purposes of the pricing of that loan. And those two flavors are standard and what's called a high balance. So if you are getting a loan past that $510,400 loan amount, you are getting what's called a high balance VA loan. And it's really important that you know that the high balance VA loans have a substantially higher interest rate attached to them. It'll vary depending on other factors, but you should be thinking about 0.5% higher to an entire percent higher. So if you're hoping to get a VA loan of 2.75%, you might if it's a $500,000 purchase, but if you're looking at a $560,000 purchase, you're probably looking at something closer to 3.75% or 3.5%. And it's just important that you know that there's that big breakover point. And also, I just spoke with somebody on the phone who found one of my other YouTube videos who was pre-approved with another lender, but had no idea that there was an implication between they were pre-approved for $550,000. They had no idea that a lot more money would come out of their pocket at $550 than at $510. And that's the kind of stuff you need to know, and it's the kind of stuff I don't let my clients not know. Anyways, hopefully you think I'm doing a great job. I hope you enjoyed this video. Please smash that like button, subscribe, share this with your friends, and if you need a home loan in Oregon and Washington, that's how I take care of my family. So please reach out to me. I'll take great care of you too. Have an awesome day. Bye.